Now, Chakri Lokapriya is joining us now at RSB from Chennai. Chakri, I wanted to talk to you about Force Motors. The results are today. Do you track that counter? Out of all the other auto companies, if you could pull up Force Motors chart for the last 3 months, the way this guy has been running. In fact, some are saying that some of the products actually have got approvals for being supplied to the defense. Up till now, they were only on the consumer side, direct to the consumer side. Now, if defense open up, then B2G opportunity could be a very big one. Have you tracked Force Motors, the outperformance versus other auto companies recently?
Good morning, Ajay.
Good morning.
Thanks for having me. Force Motors is a company I have not invested in actively, but what we do know is the company's focus now in the defense sector is accelerating, and the list of commercial vehicles for the defense industries is accelerating at a very strong pace. And that not only provides it with a strong order book, but also provides it with a opportunity to export in the future. So that positions the company really well.
In fact, that is exciting a lot of people on the street. Kunal or Nuresh, can you do a chart check for us on Force Motors?
The stock has been on a one-way trend over the last few months. After this move, it becomes difficult to actually take a call on the stock given the rally. So I would be waiting out at current levels. So we've gone up from sub 5,000 odd levels to almost 10,000 now. So in this case, it's a little bit of a case where you want to actually book some partial profits or keep a strict trading stop loss at 9,000.
Okay, point taken. So that's a view coming in as far as Force Motors is concerned. But Bajaj Finance, those numbers were below estimates, Chakri, and it seems like they're guiding that the AUM growth is now going to be 26 to 28% versus that 30% plus that we have been used to. Return on asset ratio is expected to come down. Credit cost is under pressure. Do you see a big derating for Bajaj Finance despite that BHFL listing that Street are banking on?
Bajaj Finance, the AUM growth rate for next year at about 25-26% is clearly lower than the 35% that was delivered last year. And this deceleration is in a good part because of the RBI ban on some of its various products. Yes, the company has applied to RBI for the removal of the ban. If, as and when that happens, there'll be some amount of reacceleration to its overall AUM growth rate. But given that the date is unsure, I guess, they've been conservative and guiding that 25% growth. Against this backdrop, the valuation where it is, and also given the fact that, the rural portfolio is still not really growing fast, and because the rural India spend is still slow. Against a combination of these factors, I think I would stay away from the stock.
I just want to check in on the stars from yesterday, and it was really Idea, a bit of a flip-flop after its FPO. I think that particular day it did hold up and then fizzled out from there. Yesterday again made a comeback. There's been MCX, which has been holding out very smartly. Bharat Forge came to the fore yesterday. And of course, the heavy lifting within the index was really done by both Axis as well as SBI. Chakri, a clear classification or distinction now being made between PSBs and large private banks. Kotak, of course, is now a special situation case. But HDFC Bank as well has been much of an underperformer so far. It's definitely lifted off from those 52-week lows, but unable to make a meaningful move. And then on the other hand, you have names like an Axis or even for that matter, Indigo as well, after its numbers. Help us analyze where within the large cap private banking space do you still find comfort?
If you look at large, private banks versus PSU banks, on one hand, you have for instance, Kotak trading at about 2.2 times, HDFC Bank at about 2 times, Axis Bank at about 1.8 to 2 times, depending on how you look at the book, and Indigo probably around the same numbers. Now, and if you look at the growth outlook, HDFC is not really growing that fast. Kotak temporarily, growth will kind of slow down. Axis, on the other hand, growth, while it is growing faster than the system, is kind of a tempered growth. Then on the other hand, you have the SBI, which is the books are as clean as any private bank, balance sheet as strong, growth faster, and the valuation half what of the private banks. For a similar levels of ROE, give or take a couple of percentage points. So if you adjust for the ROEs for an SBI, clearly it still stands out as a winner. And the same story holds for a Canara Bank, Bank of India, versus the private sector banks. So the private sector banks, yes, you need to hold them for their retail exposure to a certain extent, which is probably a Axis Bank to an extent. But outside of that, still it would be the NBFCs and the PSU banks.
There's another very interesting development happened in the aviation space yesterday, and that is with Indigo, which has got a 60% market share in the domestic aviation space, has ordered for 30 A350s. And this will be aimed at the international travels which they are opening up. Look at the charts. From 2000 odd, the stock has run up almost 50% in the last 3 months, or in fact doubled this year. Look at that big move coming in, almost standing at 3,800. Chakri, this the new line of revenue which is opening up for Interglobe via the overseas routes, and that is why perhaps they have ordered this massive, placed the big order. How much meaningful can it be? How meaningful in terms of revenues, international travel for Indigo? Up till now, they've been dominating the domestic scene.
All the near destinations, like foreign destinations, are clearly, they will take market share, given their pricing strategy, and they'll have a slightly. They said that they will have a slightly differentiated product as far as the ex-foreign routes are concerned. Now they're the only game in town as far as the domestic routes are concerned. They have a significant market share. And once they're also opening some kind of loyalty programs. So a combination of all this, I think it will add significantly to their revenues because of the foreign routes. And Indigo was and will always remain to be a positional investment. It's not one of those buy and forget kind of stories. So I think in the current juncture, Indigo looks good.
Zomato, that's the other one which is in focus, and Goldman Sachs has come out with a note wherein they're, upping their price target further on Zomato to 240 now. They're estimating Blinkit's valuation within Zomato's sum of parts analysis to be $13 billion, exceeding food delivery value for the first time. They're saying Zomato bought Blinkit for less than $600 million as recent as 2022, and within that you've seen that valuation parameter actually balloon. Chakri, given that for Swiggy as well, the valuations have been re-rated. Just yesterday we were talking about that the IPO has got the shareholder nod, and the valuations talked about over there as well are quite sky high. Just wanted to understand, where is it that you think that you need to scout for value? Do you think it's in the quick delivery format, a Blinkit versus a Swiggy Instamart, and who wins that is going to win the battle, or is it just purely about market share?
Zomato is clearly benefiting from Swiggy's valuation, and the fact that they're going to probably will do an IPO sometime real soon. So that valuation is kind of rubbing off on Zomato's valuation. Plus, there is the Blinkit, which is now actually driving a good significant portion of the overall Zomato's valuation. A combination of these two factors, it's clearly about growth again in Blinkit. So these are not stories where you talk about value. These are stories that we talk about growth. I think Blinkit is helping it as well as Swiggy's IPO plans.
Right. Chakri, have you tracked Awas?
We looked on and off at it. As you rightly pointed out, it's clearly the numbers are not coming in for that stock, and the valuation does not particularly support the numbers. So a combination of these two, left us on the sidelines. I think I'll still wait for the numbers to come in.
Right. Okay, that's the take on Avas. Just want to, focus on the entire liquor segment as well. Just 2 days back, you had Heineken talk about how their numbers have been. Yesterday, you've got Som Distilleries come out with its numbers. Solid numbers there. Revenue uptick of 52%, margin expansion of 40 basis points on a year-on-year basis. The entire space is looking very robust. And Radico Khaitan, of course, is the other one that we've been, flagging off, or for that matter, Sula Vineyards as well. But that aside, the pre-open rates have just trickled in. So just want to see what the reaction on an IndusInd Bank, on a Tech Mahindra, these are going to be important stocks to look out for today. What they're up to right now in trade, or for that matter, Avas and Zomato as well. And then, of course, the big one, which is Bajaj Finance, given that FY25 AUM growth, the management says is going to slow to 26 to 28%. So not firing all guns blazing as it was when the size for Bajaj Finance or the base wasn't as large. 1.5% of a dip coming in on Bajaj Finance. It's floating around that 7,000 mark, and now it's gapped down further. 4% of a cut. It's almost turning out to be a bit of a Kotak Bank kind of situation yesterday. So we'll, give these rates a bit of a skip and come back and mark that. Kotak Bank, of course, is seeing a bit of a stability though come by. Chakri, I don't know if you're going to, nibble in at all into Kotak Bank after yesterday's crash.
After yesterday's fall, today the stock is probably trading at about 2.2 times. Its ROA will probably come down by about 30-40 basis points. And then, if you adjust for everything, the ROEs, etc., will move down a little. So is there a great amount of risk to earnings because of this RBI ban? I don't think so. Therefore, is there any scope for growth in the other parts of the business? Clearly, yes. So I think clearly it's time to start buying into Kotak at the current levels. But yes.
Start buying into Kotak at the current levels after that 10% fall in the stock. But Chakri, just to flag off what we were talking about, what the liquor segment numbers have been, be it Heineken, and, I was going through some of the other global numbers as well, looking very, very strong entry. Pernod Ricard is the one I'm talking about. They as well talked about a healthy growth when it comes to their India business. What's the best way to play some of these stocks, although most of them are at their 52-week highs, be it SOM, UBL, USL, or for that matter, Radico?
United Breweries is looking good. They've also been benefited from lower barley costs, which are their raw materials. So, because against this backdrop, their EBITDA will grow really strong. And if you look at the valuations compared to some of the other names that you mentioned, whether it's Carlsberg, etc., it does look favorable. So against this backdrop, and also with a hot summer, the volumes will pick up further. United Breweries at the current stage, I think you will see margin expansion, and which will support the stock price.
Chakri, we'll let you go on that note. Thanks as always for taking the time out.
If you like this video, then like, share and subscribe to ET Now.